Hi, Larry Berman here, and here's what's on my radar this week. Well, as we approach the holiday season and we just passed the quadruple witching in a week where the Fed from a couple months ago completely did a 180, and it was interesting to watch Powell's press conference this week, how he had to backpedal and say, oh, that's not the kind of inflation we were looking for. There are many different types of sources that drive inflation. For them not to understand what's happening here, to me, is a colossal failure of common sense. And there's a good book out named that. It was written around the Lehman crisis from a friend of ours, Larry McDonald, highly recommended reading. The Fed is behind the curve. They're trying to get ahead of the curve. We saw midday Friday, one of the Fed voters next year, Harker, was out there saying, maybe in March we have liftoff in terms of raising rates. So they're trying to catch the curve here. At the end of the day, if equity markets are truly being supported by the Fed, and we think they are, earnings have been good, don't make no mistake about that. Fiscal policy and reopening is helping, but the stop, start, I don't see how the Fed comes up with 4% GDP next year. I think at best it's 3 and probably closer to 2 or 2.5. So, you really have a lot more question marks than you do answers as we head into the new year. So we think that's going to mean more volatility. We think large cap tech that we've been warning about for what seems forever now, but really in a big way since the Fed is starting to unwind QE. They even talked about in the press conference QT, meaning unwinding the balance sheet. And large cap, long duration, low dividend paying names are going to have a tough time in that environment. So 2022 looks like it's going to have more hurdles than tailwinds at this point. And unfortunately, I don't want to be the Grinch this time of year, but the Santa rally is likely to be somewhat subdued unless we go down 2 or 3 or 4% first before we rally into year end. So around 4,600 is where we're sitting, just above that right now on the quadruple witch close. And we're probably 1 or 2% on either side of that at the end of the year, with a bias slightly towards a little bit lower than higher, I think, but not terribly too much at this point. It'll really, as we get closer to the end of Q1 and the end of tapering, and we kind of see if there's any more fiscal stimulus, which doesn't look like it's coming right now, you do run the risk of a bit of a fall off, and the natural economy isn't strong. So we'll see how that all plays out, but that there are certainly more hurdles than tailwinds looking at 2022 at this point. In terms of bull and bear picks of the week, again, this time of year, you got to be looking for what's been beaten up. Very good names, good sectors, parts of the world that haven't done well this year. Brazil stands out. Other parts of emerging markets, we still think China is the place to be, despite all the noise to the negative at this point. China A share market and China tech, to me, China needs the world more than the world needs China, and they'll recognize that as they get closer to their next plenum in October, just before the U.S. elections. So again, EM we like for 2022. International markets we like more for 2022, and we're just much more cautious on large cap tech that have been leading the U.S. As the Fed unwinds here.